Okay. Hello, everyone. Welcome to tonight's stream. Let's just dive straight into it, shall we? All right. So we're going to start off with live stream questions. And first things first, let's look at Palladium. All right, Palladium. Hey. Hope everyone has had a good month so far. Very compressionary behavior. It's interesting to see on the daily chart anyway. It used to be extremely volatile earlier in the year. And we have since seen significant correction, which is really good news, actually. That's what you want to see. Right? Because this price action here was not healthy and it was not sustainable. Quickly saw this nice reversal. And what I'm looking at is the fact that this is all compressed. All green here as well. So what we're going to do is we're going to look at lower time frames, and we're going to try to find impulses that imply a direction. Quite frankly, that's not the case. We don't have those impulses yet, so we don't have a direction. All right, but can we range trade this? That's the next question. Let's try 8-hour chart. Do we have any ranges we can define? We do not, because this period of compression has gone long enough that we're no longer generating the current longest compressed period. In other words, this nice blue section, which gives us a ranging band, and you can see some nice work previously, capping off the top here. But other than that, I'm not seeing any plays. Next up, we're going to take a look at Iota. That was a big one back in the day. Hey, you're pretty good at this. I do see your bullish impulse to the upside here. We are breaking above our CLCP, right? What's nice is it looks like we would have an identical move here, where we tag above this here. But the difference with this one is now we're actually seeing the UAPM cross up above. As before, it did not go above that 0.7 value. So this is a nice expansion. The question is, can we cleanly define this mean reversion condition on the daily chart? I don't. It would probably be off the 80 period. So let's take a look at the 160 on the 12-hour for better resolution. Right? Does that show up as the 160? It does. It is exactly 160 because our indicators are intra-time frame. Right? That is incredibly powerful, and not many indicators do that because we don't have time frame bias. Our indicators adapt to match what we're looking at. And not what we're looking at, but just the state regardless of time frame. It's fantastic. So here we're going to line up that 160 period manually because we do have volatility overhead. Okay. You know what? We're not. Because technically this mean reversion is long over. I was looking at the daily chart, and it just kind of occurred to me that it's fully compressed. So the only thing that this has is bullish expansion with no overhead. And that works. You can trade that. So next question. Can we define a current loss? We can. Isn't that great? And we can do so with ACAT. Oh my God, dude. When did you call this? Earlier this morning. God damn it, dude. You're good. Yeah. You call it right here, didn't you? That's perfect. Yeah, Lux bounce on the 4-hour, implied trend with daily expansion. That's exactly what you want to see. Let's talk about targets. Return to status quo. That's 25% increase right there, at least. Of course, this all hinges on the idea that this could stay above our locks. So we're above that pivot. This condition remains true, and we will trend in the scope of the daily chart. So very strong chart. Next up, let's take a look at audio. Sustained bearish trend. No clean locks because this is a trickling move. 4-hour chart. Okay, I see what you're trying to go for here. You're looking at, sure. The only play here is if we touch down on a 3.2 of the locks, that would result in a significant kickback. But that is very low probability of actually occurring. Of it actually reaching that value. Set an alarm. If it hits, buy it. And just trade the short scalp. But other than that, I'm not seeing it. One thing you do have is if you can short this chart, you do have the start of a new bearish expansion on the 1 hour, which is very nice. This is implied runaway with free space all the way down to 900. So if you can short it, you can try it. It looks pretty safe to me. PLTR. Okay, it's an actual stock. Ha! Dude, that's clean. Man, you don't need my opinion on this. You have everything you need, man. Complete compression on the daily chart. Bearish weighting. Directly on the locks pivot. Take it. What do you need me for? Only issue here is your locks is artificially capped due to lack of history. Unless, of course, I'm just looking at the wrong chart. Nope, I'm not. All right, yeah, so take the expansion if you want to. You know how to define targets. Next up, let's take a look at Link. Of course, if you have any questions, please drop them in chat. Technically a bullish expansion on the daily chart. Again, very good. 4 hour, can we define that locks? We cannot. So Iota is currently better than Link at this time. Let's take a look at Atom. So we're talking about this in August, weren't we? Just following up, we were saying we would try to look at bounces off the locks. Obviously, that performed rather well. I hope you took that trade. I'm just doing that from memory, though. Let me know if that's actually what I said. But if we just look at the chart from the 27th, that is what we would be looking at, right? Like right there. That's perfect. Is there expansion on the daily there? Yeah, it's completely compressed. Wait, sorry. Yeah, it's completely compressed. Oh, God. No, that's beautiful. That's a very good chart. I want to take a look at Ethereum Classic. Is daily trend still defined? It's the main question here. Getting some weird volatility overhead with this converse bearish expansion. which is very atypical. To actually generate volatility overhead from converse move. Because here, if we're just trying to find off the 250, yeah, that did give way on the 16th. And since then, we're in mean reversion. So 4 hour, if we can define the bullish mean reversion pivot for converse expansion, we do get a pretty interesting opportunity, right? So here, we have the active mean inversion. I'm not seeing the converse bearish expansion. So what we do have is a secondary initial impulse, which then immediately mean reverts, which is in line with the higher time frame mean reversion. I think it's so technically this is currently mean reverting on the daily chart. Let's redefine 12 hour for better resolution. 8 hour fine, sure. Off of 300. Right, this mean reversion is actually almost complete. Because if we look at this top here, we extrapolate our target mean reversion here. That's not very clean. Let's try that again. All right. First week of October, this should be sufficiently compressed for trend continuation, so to choose to do so. Possible, because what's interesting to me is down here on our 4 hour chart, we have this very clean CLCP, and we are compressing inside of it. So technically speaking, if we can stay inside this range for the next week, it would be a pretty good case for a volatility pop in either direction. Bullish is nice to think about. And it will be very obvious if it is a bullish pop. So I'll set an alert. Put in the alarm. Huzzah! Yeah, we pop up that. I'm going to take it. All right, another one we have is USD NZD, plausible candidate for 3.2 standard deviation bounce. Dollar is the best performing asset this year, which is really entertaining with how many people are just complaining about inflation. Right, so essentially with this kind of chart, we're doing something, oh my God. It's happened. Yeah, this is it. This is your high risk, high reward reversal play. That's dangerous, but it's very attractive. Just like a redhead I knew in college. I'm sorry. It popped in my head and I had to say it. All right. So, wow. That's incredibly clean. This is a really big call, right? To imply that this would be the reversal point. This is an incredibly rare signal, all right? You do not hit the 3.2 standard deviation of the LOX on the daily chart. It's like once every 3 years you'll see it. All right, let's go back until we actually hit it. right? And I'm talking developed locks. Like, right, this is an initial expanding locks. If you still have slope on your plume, your 3.2 doesn't count, right? Because that's what trend is it's repeated moves outside regular standard deviations, which define your volatile periods. Right here you have slope, so it doesn't count, right? Like, look at that. So when you have slope on your plume, you can trend along your outer standard deviations because you're still expanding. Expansion is good. But once it tapers off and flattens, so say this range from here to here, right? Once that starts to flatten, that's your range where if you hit the 3.2 standard deviation, this here would be a hard reversal. Like, you just did not see this signal. It's incredibly rare. Here's an interesting case. Significant slope all the way through. Trending outside the standard deviations. Once this flattens off, any tag of the 3.2 standard deviation becomes a hard reversal pivot. And we're back to 2007, right? We found like one example in the last decade of this play. This is rare, guys. Okay. Actually, gonna have to take this trade. This is too big not to. Yes, this is the only chart I think currently that's touching this pivot. At least I think Zealot has screened most of them. Oh God, no, we have some serious after-hour moves here. Jesus Christ. We just blew straight past that. Oh, that's incredible. This is incredibly irregular. It's probably something fundamental happening with the pound that I just haven't bothered to look into. I gotta get on my FX book and actually do the fundamentals for this trade because it's too big just to do technicals alone. All right, do I have multi-charts installed? Let's find out. Who knows? Maybe I'll live trade this. I don't. I have a new hard drive. All right. Alrighty. I gotta download it. Oh, baby. Try it for free. Fuck. All right. Well, I'll probably do this another day. I'll get it going now and then review it in multi-charts later. I think that's going to be it for today. I hope this was a productive stream. It was for me. You all have a good one. Ciao. Oh, wait, question. Really, in my 35 plus years, just explain it like this. We just had 40 years of gains in 10 years. 3070 first stop. There's nothing to do but to sell all your tech. Okay. Time to pay the piper. We'll see. I don't have a claim of that just yet. We're getting some incredibly bearish shanks down here. Like, even if you're right, this is not the time to enter the short. Right? Because. All right, let's take a look at the 3.2 of this right here, the 260. Yeah, man. Like, we're close to the third standard deviation of an expanded period. It's just really not a good idea to enter a short this far into the bearish cycle. Right? Let me put it like this. Right? If you're looking at major indices and you look at 2008, you buy the exact top. Right? You buy here. Right? 5 years, you're in profit. And you would have outperformed annuities for the same time period. So if we're deep in the bearish cycle, you can't lose with major indices, right? Why? Because let's say there's a losing stock and it goes bankrupt. It gets removed from the index and it's replaced with a winning stock and the index goes back up. You cannot lose on a long enough time frame. Assuming you don't see an apocalyptic downturn of America, nuclear war, all that fun stuff. Essentially, the only way NASDAQ and DJI never recover is if the US population stops increasing. And there are very few scenarios where that would actually happen. It's time to buy in, baby. I mean, on a long enough time scale, yeah, it's time to buy in. Like, we've seen mean reversion. There. Like, what's the worst case scenario? We take another hump, maybe two, and then it's back to the status quo. If you're talking about major indices, just zoom out and you're fine. Just don't use leverage so you can't get liquidated and you're good. Okay, this was fun. I'm going to talk to you all later. Ciao.